Welcome back, YouTube. Okay, so we have a crack in the fabric here with Citadel and AMC. And before I get into this BS fine of only $7 million, we're going to do a brief recap here. And we're also going to cover the reasons as to why Citadel should not even be allowed to practice in the markets, because stuff like this is going to happen. Well, has been happening. We know about this in particular because of AMC, and I'm sure they've done it across the board to illegally make millions of dollars. And this is one of the things that they're not talking about, even in this filing, is how much money Citadel actually made from this illegal practice, this deception that they're calling a coding error. And you see, the problem is that I have with this, and I don't want to go on a rant right here, but these coding errors, they never seem to cost the company money. Whenever there's a coding error or a mistake or something like that, like with Robinhood and these brokerages, it's always something to save money or to make more money. It's crazy how these coding errors never actually hurt the profit of the company. But I digress. Going into this, this is one of the main issues that I had with Citadel being a market maker, warehousing stocks, giving it the probability to front run stocks, and also legally being allowed to participate in the market. This is what I believe is the biggest issue, and that opens the door for corruption. Is if you're going to be a market maker, you should not have a horse in the race, right? You should not legally be able to participate in the market while you're fulfilling the vast majority of all market orders. This is literally gives an incentive for corruption. This gives there's really just a monetary pressure to say, okay, well, I know what these people or these orders are going. I'm warehousing these stocks. I can jump in front of them. I can, when I see the orders come in, I can create this short selling pressure, or because I make the orders, like right here, I can just label shorts as long, or and more importantly, like in our situation, label long as shorts. And we're going to dive into how they wrote this up, because I believe the words were chosen very carefully, compared to what was actually said. You have to kind of see what was not said and what was not emphasized, because I think this really alludes to what's the corruption that's really going on in the market. We know Citadel and companies alike have, and they will do anything for profit. We've seen what has happened since like the GameStop revolution, and how they will do anything to kind of save face. And really, just at this point, it's really just a slap in the face. We've seen AMC be the number one purchased stock in the stock market overall. I'm talking more than Apple, more than Microsoft, more than Amazon. And on days like that, we've seen the share price still drop 8%. Right? We've seen the interest rates over at like 1,000% cost to borrow. We've seen cost to borrows hit zero multiple times throughout the days. Sometimes even like multiple days in a row. We've seen the stock get paused. We've seen it get paused when it goes up, and then whatever reason they allow it to fall 20% without a halt. We've seen this type of manipulation overall, so we know that there's something going on behind the scenes. But this is just kind of like the crack in the fabric that we've been looking for, but also just kind of goes along with what we've thought all along, which is you're going to have to, the domino effect is not necessarily going to come from the SEC. The SEC is going to play catch up. And this is probably just kind of the save face and say, oh, we were investigating and we caught them, we were leading up to something bigger. But the pressure to do the right thing is not going to come from the inside, right? This is kind of going to be like a GameStop situation, or one of the initial situations where they have to kind of get caught and they run out of shares, and you have that explosion in price. But before I go any further, let's take a look at this right here. So it says, this is from CNBC. It says SEC slaps Citadel Securities LLC with a $7 million fine to settle short selling regulation charges. Now, to begin with, $7 million to Citadel is BS. I think that's, someone did the math. I want to say it's like 0.19% or something like that. It's like the equivalent of, if I'm not mistaken, I think it's like the equivalent of making like 100K a year and getting fined like $19. I know I've seen that somewhere, and that math seems about right. It's a ridiculous fine. But what I haven't seen, and I've read this quite a few times, we're going to look in this one. I haven't seen even just a range of money that this could have made for Citadel, which I believe which we know for a fact is more than $7 million. But It says the U.S. Securities and Exchange Commission fined Citadel $7 million for violating order marking requirements. The SEC estimated that the firm marked millions of certain short sales as long sales and vice versa between 2015 and 2020. Now, they're saying millions of short sales, right? So let's just say these short sales are $2 each, right? That's more than 7 million right there. But we're going to go a little further than this. So look at what they mentioned. They said marking longs as shorts, and no, excuse me, marking short sales as long and vice versa. And what this really needs to mean is marking the long sales as short. And this is really what I believe, kind of what has happened to a lot of the orders and stuff that comes in, because that's the only way that you can justify this, when you have a fixed number of shares. And theoretically speaking, when people sell into a stock and there's a higher float because the stock isn't trading or it's not that much demand, theoretically the stock should go down in price. And when there's a higher demand, and when for example, if you're the number one purchased stock on the stock market, the stock should increase in price because there's a demand. It puts a strain on the float. The available shares go down, the value goes up, right? That's basics right there. But what we've seen was the exact opposite. We've seen on multiple occasions that the more people pile into AMC, the more we buy, the more shares that they are, we have the opposite effect. This is the only logical explanation that this is happening on a mass scale. And maybe they have a separate coding system for any of their meme stocks, AMC, stuff like that. But this is a very logical approach to what we've been seeing over the past few years. And I believe the biggest thing is they're saying shorts into long, but really the wording that they need to be using here, and I believe they purposely didn't use it, which is longs into short, aka people buying these shares and they're immediately lending it out 10 times whatever, or just listing it as a short sale when someone purchased it as a long, because they're like, oh, okay, well, apes, they're going to hold, we can list this for whatever they want, and we don't necessarily have to come up with the stock right now, which is why you have the cost to borrow. They start cycling these shares, and all the people that are still holding, they're like, oh, okay, well, we can just list those as short, help get the price where we want, collect the fee, pay the high interest rate, and never have to come up with the money for those actual shares, as long as everyone's like holding, and we can control the price that way and continuously short it down. And of course, when we have things like dilution and these shares coming in, that just kind of helps out. They're like, oh, look, more shares. So this is it's really an incentive how this thing is played out, where they can, when they were able to get like the additional shares and stuff like came in. I know people were voting against the additional shares and stuff like that, but this also just kind of helps play into their hand, because when they do this flip and they cycle these shorts and stuff like that, and they take these bets, they're able to make profits off that. Now, maybe they're not making profits in totality, but when they take these short positions and they're able to cycle them and the stock in fact goes down, they can then use the revenue from that they're making from those short positions to refinance the short position. It's kind of like there's initially people saying, oh, Citadel, they're going to go bankrupt, they can't do this forever and stuff like that. If they can manipulate the stock to this level, they can kind of just keep recycling the money and just kind of have the manipulation in AMC kind of fund itself. And that's kind of where you see like where it would be the massive implosion if that were to get out of control and we had that run on the actual play. But in a way, it just kind of gives Citadel the illusion that, okay, financially, this isn't a bad position that marks on our books, because we're able to, I don't know the actual numbers, I don't know if anyone does, but if we're able to actually break even or kind of use the money that we're making from the fraud that's going on in this asset to kind of fund, further fraud, basically. So it says, Washington, the Securities and Exchange Commission fined Citadel $7 million in a settlement of charges that the big broker-dealer firm mismarked sale orders over a 5-year span, the agency said Friday. The SEC estimated the Miami-based Citadel Securities marked millions of certain short sale orders as long sales and vice versa from September 2015 to September 2020. Yeah, sure. It stopped in September. I wonder what these certain short sale orders are, right? The inaccuracies were the result of a coding error in Citadel's automated trading system, SEC found. And this is what I was saying at the beginning of the video. It is very ironic that none of these coding errors happen to cost the company money. And and see, this is the part that I really dislike the SEC about. If Citadel had a coding error, and let's just say it was only from 2015 to 2020, if Citadel had a coding error that was costing it money annually, it would not have taken them 5 years to find it. There's no broker out here that has a coding error that's costing them money that they simply just takes half a decade for them to figure out. Like, oh my God, we're losing money here. They numbers are their business. Their sole purpose here is to run these numbers and to make money. You don't go year after year after year without noticing these things, right? They know where every dollar comes from, and this is the kind of BS, and this is why this $7 million fine is absolutely crap. There should be. I'm going to try and find it. Maybe there is, but there should be some legislation that says, "Hey, how much money did you make from this BS, from this scheme, basically? Which stocks did this? Which stocks did you target? Because obviously, if you're a market maker, and no one's talking about this, if you're a market maker and you're mislabeling the orders that's coming in, shorts versus long, long versus shorts, and stuff like that, you're falsely manipulating the price of that asset. So even let's just say there's no fraud today, right? From 2015 to 2020, those certain assets have been the prices that we've seen have not been the accurate prices. This is worth way more than a $7 million fine. We're talking the tunes like you've affected, and I'm sure they're not doing this with small cap assets. You've affected multi-billion-dollar industries with manipulation practices of the actual price to investors on Wall Street, and I'm sure these are big cap assets. So I mean, you're affecting the price of index funds. Oh my God, and you get a $7 million fine, right? If I go to Walmart and write a bad check or something like that, like if my door's getting kicked in, and you can do this type of fraud openly and get a $7 million fine, which Citadel probably made the market open at 9:30. Citadel probably made 7 million by 10, but by 9:45. This is the crap. This is why people are fed up, and this is why people are losing confidence here in the SEC. Like we really need like an entire overhaul of just our regulation department, and certainly to break up market makers from being able to invest in the market. I think that'll solve 99% of the problems, which is not allowing market makers to invest in the market. But anyway, let's go on. The SEC alleged Citadel Securities violated a provision of regulation SHO, the regulatory framework designed to address abusive short selling practices, which requires broker dealers to mark sale orders as long short or short exempt. A Citadel spokesperson told CNBC that the matter had no impact on the quality of our client execution. Okay, what about the impact on the assets that you were mislabeling? We're not going to talk about that, huh? While updating our systems to accommodate certain client requests, we made a coding change that inadvertently affected a de minimis percentage of our order markings, the spokesperson added. We detected the issue, what is it? I lost my place, and promptly fixed it more than 3 years ago. Interesting. The SEC in its administration order settling the case noted that Citadel Securities is one of the largest broker dealers in the U.S. equities market. As of May 2023, Citadel Securities executed approximately 35% of all U.S. listed retail volume and 22% of U.S. equities volume across more than 11,000 U.S. listed securities. So we're talking a major player here. In a short sale, investor borrows stock shares and sells them with the hope of buying the same amount of shares back at a lower price and returning to the lender, pocketing the difference as profit. Mark Cave, Associate Director of SEC's Division of Enforcement, said compliance with requirements that sale orders be properly marked is a key component of regulatory efforts to curtail abusive market practices, including naked short selling. Interesting. Failure to comply can have negative downstream consequences on the accuracy of the firm's electronic records, including its electronic blue sheet reporting, depriving the commission of important information about the market it regulates, Cave added in a statement. Also on Friday, the SEC fined Goldman Sachs $6 million for inaccurate blue sheet submissions containing identifying security trading information. So you see, this is, and this is also another point I want to make too. It's not just Citadel. Obviously, this is when you do this type of fraud in the market. This is obviously a group effort. So I believe Citadel to be the main culprit. But this is the type of BS that's going on right here. You have that no one is commenting on, okay, what are these assets that you manipulated? What were the actual prices on it? Like even if you manipulated an asset, I don't know, $2, right? If we're talking, something an asset with a float of 100 million shares, something like that. We're talking about a large market cap. We're talking billions of dollars, right? Like, and I doubt they're out here. I doubt that these short sales and stuff were coming in off of penny stocks, right? And you see how there is no mention of the shares that they did, nor most importantly, the amount of money that they made. Where did they get these numbers from? That's another question we have to ask. Is this $7 million for Citadel, $6 million for Goldman Sachs? Is that proportionate to anything? Or is that just some random number you pulled out of the air? This is the crap that we see that has been manipulated. And this is what I believe. And I made a video on this a couple years ago when I was talking about breaking up the AMC, when I was talking about breaking up market makers from being able to participate in the market. As long as they're able to, there will be this incentive. And as long as the SEC hands out these little puny, non-profit affecting fines, it's like, it's like fine is just like, I've seen this meme. Fine, when you find somebody something, it just means it's legal for a price, right? It's illegal. It's only illegal if you don't have the money, right? If as long as this is within reach, if I can make, $100 million or $1 billion in fraud, and if I get caught, I only have to pay $7 million. Do you stop doing the fraud? Will they stop doing the fraud? Like this is the biggest thing. It's like that type of return. There's no incentive to stop, because we've already known that they don't have any like morals or standards or stuff like that, or as far as for the best interest. The bottom line has always been profit, and we'll do whatever it takes to get there. So we know what direction this is going to go. And this is what we have to kind of pay attention to, like these news here, because they kind of slipped that Goldman Sachs in there at the end. And this is coming out, quote unquote, 3 years after the fact. And this is just a settlement that they agreed on. So, obviously there's a lot of back and forth behind closed doors that we don't know about. But these are the people that's supposed to represent us and protect us from, big bad wolves in the market. But obviously there's been some huge negotiations that we're probably never going to get the information to. But this is the manipulation that I believe that we're seeing across the board. Not just AMC. I believe AMC is probably the largest victim of these lies, but I believe this is the type of BS that's going on across the market. And these are the things that we're going to have to look for. Then kind of take note and see how they're handling this, because after this whole thing implodes, there's going to be some indictments, I believe, for like the SEC, and we should hold them accountable. There should be some civil suits and stuff like that as well, because when you are, I believe, operating in this manner, you are enabling them in a way to continue, right? Protection, fines, and stuff like that. It's supposed to discourage the wrong thing and predatory practices and stuff like that, and not just kind of say, oh, okay, well, you got caught, bad. But if you're a small firm, I guarantee if you were a small firm and however many millions or billions of dollars you did that, they'd have been dragging you out in cuffs, and you'd be on the front cover of the newspaper, for fraudulent lending or Wolf on Wall Street type of thing. And this is just really frustrating overall. I do believe here that this is just kind of like another crack in the fabric where you can kind of see the light to let everyone know that, hey, we're not crazy. This is happening here. We're kind of slowly getting the evidence to know, and the behind the scenes information to say that, okay, this is actually happening here, because they're dragging this out to make it seem like, oh, it's crazy, it's nothing there. And you're getting more and more evidence. Now, a lot of things that were said years ago we're finding out the facts here, and it's all kind of lining up to what we thought and what we know is happening with the manipulation of this stock. Um, I still have my shares. I believe that we're going to continue to kind of get like some bits and pieces of information, here a little and there a little until this thing implodes. But it's most importantly just to keep our eyes to the ground, keep our ears to the ground and our eyes open to kind of see what is being put out here. Because this here, it may seem like, like nothing or like it's unrelated. But if you read through the fine print like we did in this video, you'll see how this all lines up perfectly with what we've been saying all along. Anyway, let me know your thoughts in the comment section. I've been on here about 20 minutes. Let me know your thoughts in the comment section. How do you feel about this information? I'll try and get back to as many of you as possible. Thank you guys. Subscribe to the channel if you haven't. Like this video, share it with a friend, and I will see you guys in the next one.